From the studios of Farm Journal Broadcast, this is AgDay.
A sense of optimism.
We might have a little bit of lack in supply, which equals more demand.
What farmers in Louisiana are seeing as they haul in this year's cotton crop. Cattle herd lows push prices to record highs.
We're still sitting on this tight supply.
But what does it mean for the packers? The impact of a massive strike at U.S. ports.
The next thing is consumers will see higher prices, and they don't like it.
As the trade losses mount for U.S. agriculture, right now on AgDay.
AgDay is brought to you by Pioneer. Pioneer brand corn has game-winning statistics like a 10 bushel per acre yield advantage. Pioneer brand corn. Your best year starts here.
Good morning, I'm Clinton Griffiths. A massive U.S. port strike is now entering its fourth day, continuing to disrupt the flow of many U.S. imports and exports. And as Laura Aguirre reports, it's raising many retailers' fears of a supply chain slowdown ahead of the holiday shopping season.
There's clearly a deal to be had.
Transportation Secretary Pete Buttigieg weighing in on day 3 of a massive port strike.
No contract, no work.
Operations at major shipping terminals along the East and Gulf coasts are at a standstill.
We have been engaging the parties on all sides, urging them to come to the table.
If the strike starts pushing into a second week, third week, we're going to start to see some disruptions.
There are already signs of supply chain uncertainty in some cities. Store shelves around the Hampton Roads area of Virginia bare of many essential items like water and paper goods as union members picket outside of the port there. Experts caution against panic buying, noting that many of those daily basics are produced in North America, not reliant on shipping imports.
We have thousands of cases that are on order for the holidays, and a lot of those are on the water now trying to get here.
For retailers who do rely on ships, like this wine and liquor store in Houston, a prolonged strike could dent holiday sales and frustrate customers.
The next thing is consumers will see higher prices, and they don't like it.
Secretary Buttigieg says he feels both sides are not that far apart on key sticking points like pay raises.
In industry after industry, auto workers too, you've seen historic deals with wage increases for workers coming alongside continued business success. And that's what we're hoping will be the outcome here.
I'm Laura Aguirre reporting for AgDay.
We've been telling you about the impact the strike is having on the movement of agriculture in and out of the country. But could the strike also be adding to some price supports? We talked with Dan Bossy at this year's World Dairy Expo.
We're losing, by our calculation, about $4.2 million a day on right now the port strike. But here's the other side of it. The longer this goes on, there's a bullish aspect of it down the road as we don't have imports coming in and getting unloaded. And so if you were to tell me this strike lasts for 4 weeks, I'm going to tell you it's actually bullish, not bearish. But that's a different way of thinking about it, just relative to the amount of product that would not be offloaded into the United States.
Nabasi says if the strike lasts longer than 4 weeks, the market could get even more bullish across the board. Meanwhile, workers at a Cargill factory in Cedar Rapids, Iowa, are now also on strike. The strike involving Teamsters Local 238 starting Tuesday night after it rejected the company's latest offer. Its contract with the company expired on Monday night. Now, it says it has been in discussions over wages and working conditions impacting about 100 workers. Updating you on cleanup efforts surrounding Hurricane Helene. Hundreds of roads remain closed and several towns are still isolated, with many people trying to get needed supplies like food, water, and medicine. Right now, hundreds of people are still believed to be missing. More than 4,500 federal personnel are helping in recovery efforts in hard-struck areas. FEMA says the terrain in some of those areas may complicate those efforts. USDA also on the ground, focused not just on helping the ag industry, but getting food to those in need, along with providing emergency staffing to handle applications for crop insurance and emergency conservation programs.
We're still assessing the size of the impacts to agriculture and forestry. We know they're significant. We know there will be short-term impacts, and we also know that the impacts on farmer livelihoods will last for potentially years.
Electricity is being slowly restored as the number of homes and businesses without power dipped below 1 million for the first time since last weekend. Most of the outages are in the Carolinas and Georgia. And help for victims of Hurricane Helene could also be coming from Congress. House Speaker Mike Johnson estimating $35 billion is needed in relief. But he rejected calls from some lawmakers in hurricane-ravaged states for Congress to return early from a break running through the November 5th election in order to pass a relief measure. Johnson saying officials would need 30 days or more to finish assessing the damages from the storm before Congress acts. Along with destroying lives and livelihoods, Hurricane Helene has wiped away almost all of the drought in the southeast. Taking a look at the latest drought monitor, areas of the Midwest and the Mid-Atlantic also saw a drop in drought conditions. However, take a look at the plains, especially Colorado and Wyoming, which saw drought expand. Wyoming now seeing pockets of extreme drought, along with Montana, North and South Dakota, Oklahoma, and Texas, and there may be little relief in sight. Forecasters say, looking ahead, those areas are leaning toward hot and dry weather for weeks to come. Rain continues for areas struggling to recover from Hurricane Helene, along with areas of the East Coast. Meteorologist Jack Van Meter has more.
Taking a look at our precipitation, at least for the next 24 hours, good news is a lot of our communities that were affected by Hurricane Helene are going to be dry, which again, like I said, very good news. Put this in motion. As we can see again, not really any sort of noticeable rainfall, thankfully, in Tennessee or North Carolina. That being said, a little slug of tropical moisture moving up through Mississippi and Alabama. Now, for the next week, a lot of dry weather, especially for the central portion of the United States. Take a look at this as well. Also, East Coast getting some action just because of a trough that is going to be forming up in Canada and pretty much just riding the U.S.-Canada border. And actually, we'll be dipping just a little bit as it starts to enter the Atlantic region of the eastern part of the country. As we can see, the northeast getting pretty wet there, and also Florida dealing with some wetter conditions as well. And we love to see and share all of your harvest pictures and videos. Calvin, hard at work in south central Nebraska here, says he's seen some pretty high yields. That's awesome. I'll have more on your forecast in just a little bit.
With the cattle herd at a 70-year low and prices at near record highs, it's improving the profit margins for producers. However, there is one sector of the beef business that is losing money: the processing industry. AgDay's Michelle Rook joins us. And Michelle, what kind of margins is the industry facing, and what are packers doing to compensate?
Well, Clinton, the nation's beef processors continue to talk about slaughter cuts to prop up their margins, which have dropped into the red as they've paid higher prices for cattle. In fact, negotiated cash cattle prices have been up the last 3 weeks, and we're at $186.15 for the 5 area weighted average steer last week, which will likely put packers further in the red. Higher cash prices for cattle are shifting profit margins into the black for producers and into the red for processors. According to the Sterling Beef Profit Tracker for the week ending September 21st, producers' margins were around $95 per head, while beef packers saw red ink of $18 per head. And with higher cash prices again last week, those losses have deepened.
As these boxes slipped below 300, I think that put them a little bit further back down, but if they start slowing kill cuts, possibly that's what they're going to do to kind of get those box prices back up.
Barlick says the talk of kill cuts actually reinforces the idea that the cattle numbers just aren't there.
So the kill cuts are going to start to happen in the South. I would say they're going to keep putting that weight on those cattle to try to fill this hole. And that's what it just feels like. We're still sitting on this tight supply.
Dressed weights on steers have been running well above last year and at record levels at 948 pounds this last week. That helps the grade, but adds tonnage to the market. And he says that trend could continue for a while.
With the great feeding weather and the lower price corn and the packer backing up cattle, we're not going to see these weights break for a while.
For 2024, the Sterling Beef Profit Tracker projects feedlot profit margins at plus $149 per head and packer margins at a negative $56 per head. I'm Michelle Rook reporting for AgDay.
Oil prices trading higher during the day on Thursday, but it wasn't enough to lift other commodity markets except for bean oil. We'll have details about the entire market coming up next. And later, we'll check on cotton harvest in Louisiana, where farmers are picking a better crop than a year ago. Details today in the country.
can now to register for the Milk Business Conference 2024. Early bird rate expires October 31st.
The rally in corn and soybeans came to an end on Thursday, but could we see things back in the green today? Michelle Rook is back with more in Markets Now.
Welcome to Markets Now. I'm Michelle Rook with Dwayne Bussey of Bolt Marketing, and grains all in negative territory. Livestock futures mixed to lower as well. And Dwayne, let's talk about the grain trade first of all, right across the board, as I mentioned, and it felt like a consolidation day. Was some of this profit-taking, farmers selling, or what?
It felt like we just kind of ran out of bullish news, didn't it? And when you run out of bullish news, that equals the profit taking. And yeah, I mean, we're in gut slot of harvest here, so there's always farmer selling going on, especially with these rallying these markets now. So yeah, it felt like a quieter day.
Yeah, what do you think? The funds have been covering shorts. That's produced a lot of this rally. Are they out of ammunition? Have they covered most of that position now?
I think they have. You know, in wheat, I think they're flat. I think they're flat in soybeans now. I think in corn, maybe they've got like 60,000 contracts they're still short that they could get out of here. It's been an odd year for the managed funds as far as the seasonalities. You know, this spring, normally when they would buy a weather premium, they went short the market. And now during harvest, they've gotten out of all those shorts and made a nice rally for farmers here to hopefully reward the market and sell.
Yeah. And up at these levels, like you said, we might be seeing some farmers selling. But the other thing that has changed is we do have some rain in the forecast for Brazil and Argentina. And that's something we're really closely watching, right?
If we come back next week, Sunday night, Monday, and that rain forecast is confirmed from about that October 8th to October 10th, rain in Argentina and central Brazil as well, that'll put pressure on our markets as well.
If it does not confirm, could soybeans take the next leg higher here, Dwayne, and pull maybe corn along with?
Brazil's gone through a very dry cycle here, and if that would continue during their growing season, well, then those funds that we talked about that are flat are probably going to go long the market, and we could rally substantially then.
And livestock were mixed to lower, and some of that may be a little profit taking, or was that some hedge pressure, do you think?
Maybe a little bit of both. I hope a little bit of hedge pressure. You know, we're rallying back nicely in these markets. I'm friendly to the cattle market here. They look strong, demand looks good, but those weights are still huge, and that always makes me nervous. So if people have nice profits, there's nothing wrong with putting some protection on there.
No doubt. All right, thanks for joining us. Dwayne Bussey with Bolt Marketing. That is Markets Now. We'll have more AgDay coming up. Watch Markets Now with Michelle Rook on the Farm Journal YouTube channel, keeping you updated throughout the day on the markets at the open, midday, and close. Find out what moved the markets today and what to expect the market to do next.
For marketing advice, call Bolt Marketing, a futures and options brokerage firm.
Well, now the drought monitor just came out just yesterday, actually, and this is some of the changes that we are seeing take place in our country. Going off to the east coast in the eastern part of the country, we can see a lot of the southeast is going to be completely free of drought, and that is unfortunately going to be thanks to Hurricane Helene dropping a lot of moisture. Now, West Virginia, which has been pretty much dry for the past 3 months, still in the extreme and exceptional levels of drought, but it does look like some of those conditions are starting to lessen. Same situation in Ohio as well, and especially Indiana, really starting to come out of that rut. Now, going out west, we start to see those drought and dry conditions really start to prevail as well, especially in the eastern part of the Dakotas. We can see as well in Wyoming some of that severe and extreme drought really setting in. So it's something we're keeping, of course, a very close eye on. And it's also triggered a couple of those fire risks to be issued for today and tomorrow as well. And again, where is it going to be? Of course, in the Dakotas and also out west in Northern California and Nevada as well, as looking like some of those risk levels, just because we're seeing high winds there and again just dry air. Now for tomorrow, we're going to be again out west, pretty much just located just to the west of Salt Lake City there. So obviously when you have times of this, you just want it to be easy when it comes to burning. Again, everything is being driven by our jet stream right now. And as we can see, a big high pressure ridge in the western part of the country and a big trough here. It's going to bring some cooler temperatures, especially out east. And as we can see, another big trough really starting to dig in to that high pressure ridge, bringing that shot of moisture later on in the week. But look behind it, we are looking at those high temperatures and high pressure really setting in once again in the Four Corners region of the country. And we're going to be seeing some hot and warm weather persist once again in the states. Morristown, Tennessee, 80 degrees, 60 degrees for the low temperature. Emporium, Pennsylvania, 76 degrees, low of 49 degrees. And Chamberlain, South Dakota, 75 degrees, 59 degrees, and sunny.
Can farming and solar panels coexist? A company in Ohio thinks they can. That story next. And later, farmers in Louisiana are coexisting with better yields this harvest season. We'll check on progress today in the country. Adding solar panels on farmland is becoming a hot topic of conversation, but one company says agriculture and solar can coexist. The practice is called agrivoltaics, and companies are popping up across the country selling special solar panels to work in a new way on the farm. BJAAM Solar Partners is one in Ohio. Speaking recently with Farmers Advance, the company's technical director said they have a 33 kilowatt 60 panel system which allows for maintenance underneath, saying livestock can graze beneath the panels because cows love the shade they provide. You can even drive a combine or a tractor underneath them. He says while these newer types of panels cost about 10% more, they make up for it in efficiency and output. Have you ever wanted to run what-if scenarios on your fields without having to wait months to find out if they work or having to even grow the crops? Well, a researcher at the University of Nebraska-Lincoln is getting a grant to create digital twin corn fields. James Schnabel, a plant scientist, is getting a nearly $1 million grant from the National Science Foundation. That grant will help him develop the first digital twin of a cornfield. He says once they build the digital twins, researchers can use high-performance computing to simulate and explore how whole fields of corn with different properties would behave. Things such as how resilient they are to wind and how efficiently they use water and capture light, all without having to put a seed in the ground. He's also collaborating with researchers at Iowa State University and Purdue, who also received funding to work on the project. Well, not virtually, but in reality. We're off to Louisiana to check on cotton harvest next. We'll see how better conditions in 24 are helping improve yields compared to 23 in the country. The 2024 cotton crop is bigger and better, and as LSU Ag Center correspondent Craig Gotro tells us, it's primarily because of better growing conditions than last year.
Cotton farmers in Louisiana are in a much better mood now than they were last year. The 2023 drought severely hampered yields, causing farmers to struggle to recoup their input costs. This year, pickers are plowing through fields with much better yields.
So far, everybody that I've talked to is picking at least over 1,000 pounds per acre. Some people picking upwards of 1,300 pounds per acre.
Growers in the northeast part of the state were spared the wrath of Hurricane Francine when it took a more easterly track. What weather issues farmers experienced occurred just before Francine.
Most of the damage that we saw in cotton, which wasn't substantial, mostly just some cotton laying over in the field, actually happened a week before Francine from some of the weather systems we had moved through.
The wet weather in early September did cause some issues regarding defoliating the crop. Defoliation is essential in increasing harvest efficiency.
It makes it cleaner to pick because we're getting rid of a lot of that green leaf material in the field. It also dries out plants, which was really important after Francine and the weather system before it came through because we had a lot of moisture in the bolls and on the plant.
While Louisiana cotton farmers were spared a tropical event, cotton growers in Georgia and North Carolina were hit hard by Hurricane Helene. That may give some price support to Louisiana cotton.
It will be interesting to see how that influences the price going forward. We might have a little bit of lack in supply, which equals more demand, which may increase prices slightly.
Just about half of Louisiana's cotton crop has been picked, and the harvest should be near completion by the end of the month. From Northeast Louisiana, this is Craig Gotro reporting for the LSU Ag Center.
All right, thanks, Craig, and that's all the time we have this morning. From all of us here at AgDay, I'm Clint Griffiths. Have a great day.